Hey traders, this is Christian from Hertz Tribeca Trade Group, and it is Friday, March 26th. So this is your end of day and end of week market recap. Wow, what a crazy day, what a crazy week. Wow. I would say for the theme of the day, there's a couple different things, right, that happened. Particularly interesting, there was a fund that seemed to do a lot of liquidating today. I have my ideas on the fund, but I'm not going to speculate in this video, but a lot of block tradings, a lot of block trades, big, huge block trades that went up in some companies, really moving things around. We're talking about billions and billions of dollars of trades that went up in things like Baidu, VIAC, DISCA, Fitch, FTCH, just to name a few, and I think there was about 15 to 20 names that went up. So that was really interesting. It brings me back to when I was an institutional trader. I used to have to make what's called risk markets, but they weren't in single names; they were in ETFs. But I've made some big risk markets for hedge funds and for institutions, and we've done some trades. I remember I traded one time close to 40 million shares of EWJ. I thought that was a big day, but some of these trades, a couple trades were well over $1 billion. And I think the executing broker was Goldman and Morgan Stanley on that. So I'll talk a little bit more about that. Let me get into some of the trends for the day. And risk disclaimer in front of you: everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything is for education purposes only. So let's go over the numbers. And if you can't see these numbers on your screen, YouTube does take a little while to render the high definition version of the of this video. So be patient. Or if you can't, if it's blurry, you could either wait till later, or I put this screen out on my Twitter page too, so you can find it there. But SPY finished up 1.6% for the day. Qs all over the place today. They managed to, really a big ramp at the end of the day to get the performance to where it was. But 1.5% for the Qs. IWM also finished up 1.8% for the day. The VIX fell now below 19, I believe. I see 1886 on my screen. So VIX now under 20, and I think that's some of the lowest level that we've been to. I know we hit 19, but I think that's around the lowest level that we've seen in a while. Sector performance, unbelievable, the semiconductors, and really that kind of gets me more excited about this market, to see the semis, which I view as a bit of a leading indicator. They were up 5% for the day, so it's great to see the participation there. Metals and mining were very strong. Steel names, you could see, were up over 5% for the day. The home builders were up 3.8%. Tech, look at tech, participated too. Solar managed to be up 3%. Medical devices, so really good, participation in the market, and I highlighted all these groups. Again, this column that I have here is percentage change from the open. I like to see where the buyers come in to different groups, and by sorting this by seeing what went up after the open, I can kind of pinpoint that a little bit better. The ARC funds were all over the place too. I think at one point they were down, again, another like 2 or 3% or something like that, and they managed to recover. Now, again, they're still underperforming. If you look at the ARC Innovation ETF, which I'm going to talk a little bit about, I talked about that quite a bit. If you're a member of Tribeca Trade Group, we do a couple different things here. We do a pre-market session, right? And I answer questions, and I also give a lot of my perspective and always my opinion on what's going on in the market. And then we do Q&A a few days of the week, and I do like a look ahead, and that's at 1 o'clock. So if you're looking for more, education, and if you're looking for, someone to kind of tell you what the themes of the day, I do try, I commit a lot of time to this. I enjoy it. I enjoy the education a lot. I've always enjoyed watching what the market does, and kind of an amazement on days like this. But, if that's something that interests you, and we're really good at picking up where there's this strength in the market. Not so much where we want the strength to be, which I think a lot of traders are still have that mentality of stuck in last year's trades that worked so well. We try to be as objective and really just be observant and find where the new trends are going to be, right? We don't want to look to see what happened last year. We want to stay laser focused on what is going on, what are the new trends of this year, not last year. And that's what we really excel at. Able to find those trends and capitalize on them. So we'll get into my trading in a minute too. But let's talk about some of the price action. Like I said in the semis, we can. Sorry, let me do the index. Let's look at the indices first because I think it's important. So again, and I put on the volume profile. Right, we use, of course, the indicator called the MarketWebs, which we're having another webinar for members next week on Monday. We're having another webinar on that, and so that should be good. We have some new features to roll out for the MarketWebs indicator. But volume at price is what I look at, and it really gives us some good support resistance levels. All week long, I thought that this was a key level. One thing, we made this high back on Monday, and that was the high for the week until right at the end, basically the last hour of the day. We were kind of fighting with this a couple times, made a lower high here, retest and fail of the bottom of value. So again, this value area is based on last week's volume profile, right? And we have our own secret sauce to give those support and resistance levels based on the last period. But you could see how well it gives you the support. And again, look at the consolidation around that bottom of value. And it looked like it was going to be rejected, especially during this hour. We really started to turn down. But, there were some big buying programs that I guess flushed through the market. And you could see the volume too. And just in the S&P futures as well. So that really picked up there at the end of the day. So where does this leave us for next week? We're very close to pushing to new highs in the S&P, and this is something that we've been talking about. While there has been a lot of traders who are trapped into last year's trades, specifically high growth, the rest of the market has been doing quite well, and it really has taken. It's always a challenge to get yourself comfortable with what are the new leading sectors and new leading groups, but you have new leadership for this year. And it's not to say that high growth will never return, but they had a phenomenal year last year. It's probably going to take a little bit of time for some of those stocks to come back because they went up huge last year, right? And that's how it works. The market changes every year, right? Every year, over time, different groups lead. So I think it's a good thing to see that there could be a rotation out of high growth and the market is kind of shaking it off, right? And even though some of those high growth names, which we've talked about, when you look at market cap indices, some of them are bigger weights in the indices. So I think it just really goes to show you the nice participation that some of the other sectors are picking up that slack. So I think that's a pretty strong market. Now, again, I'm looking at, of course, I'm a little bit biased because of how we finished the end of the week, as there's been a couple times this week where things didn't look good. So, we're always reassessing based on the new information that we get and changing our opinion based on what price is telling us. And price is always correct. That's how I've kind of learned, trading over the years for me, is to not argue with price. You could have opinions and so forth, but the price is going to tell you when you're right or when you're wrong. Let's look at the Qs. So the Qs, we'll start with the daily chart on this one. Still, I think this is good so far. We've made, since we did not break this low from yesterday, right? We're trying to put in a little bit of a higher low from this date. Now, we've seen a number of growth stocks actually break below the 3738 low, but so far the index of the Qs is trying to turn and actually put in a higher low. So we've talked about a couple scenarios that could happen in previous videos. We've talked about possibly a double bottom. It was one scenario. or even coming down here, or putting in a higher low and then going out to here. So there's still a lot of things that could happen. There could be a lot of chop left too. The level that I'm watching is this 318 for the rest of the month. We only have one more week of March, by the way. But if not, it's we have this is a developing value area, by the way, because the month is not done. So the shape is going to change a little bit. But for now, I'm watching right around 318.50. Let's just move over to IWM. IWM kind of all over the place today too. And by the way, I wanted to go over just one more thing here. In the price action for the Qs, another good example of what a version point of control is, which I already put this out on Twitter. But if you want a little bit of an explanation for it, notice again, you don't get a version point of control when price passes through the point of control for a given period. Remember, the point of control is where the most amount of volume has occurred in a period. So this particular volume profile, the majority of the volume happened here, right? And notice how price passed through it. Same thing over here, right? The majority of the volume in this period was right at this line, right? And price passed through it. So it's like it's the value area is filled, right? This particular period, when we started to move down, we had all this volume here, and you could see that price, and once we got into this period, which was last week, we did not even get in. Forget about the point of passing through the point of control. We didn't even pass through the value area at all. So it's kind of a similar concept to if you're familiar with how gaps work. It's very similar. And once we start getting out of a range, price is going to gravitate towards where there was a big volume pocket before, and that's the point of control. So you could see price getting back to there, and you could see price didn't do anything much after that point, right? Because it's satisfying, a big volume node, NODE. So they're really great for aiming for targets and then knowing where to kind of take some money off the table, right? Once it's satisfied. So great for setting up targets for your trade, because this works in any name, right? And there was a lot of things. There was a lot of interesting names. I think Baidu. If we look at Baidu on the daily chart, so here's a good example, right? Today we took out that version point of control on the daily chart, and look at the bounce. Now, again, a lot of times we can go down further, but it really acts as a pretty good support level, right? So again, that volume, that point of control, is from this volume, this time period, right? So we draw that forward, right? And again, a nice level to trade off of. Look at Baidu finishing in the green today, pretty amazing. And look at the volume. Whew. All right, so let's continue with that. So we went over the indices. We talked on multiple time frames. Let's talk a little bit about the semiconductors. Right. So we capitalized on a. Let me just see if I have. Whoops. We capitalized on Applied Materials early on. That was something that we noticed that had this strength today. So I got in at 121. I did take off this trade. The other thing to kind of, as I go through, you can see I've got a lot of trades going on for the day. I just thought that there was a lot of good opportunities, and I participated today. So, Applied Materials basically closed on the highs as a lot of things did. But this is really nice to see this move out of here. And if you look at some of these names, if you look at a Lam Research, some of these names I know are harder to trade. They're high-priced stocks. The options are wide. But Lam Research, very strong. ASML, up 7% out to new highs. Very, very strong. I also traded some Texas Instruments. I always seem to forget about Texas Instruments, but I caught some bullish call activity on the tape. And again, for me, the option activity is just an idea. And I'm like, hey, this looks pretty good. And I got into this thing around, let's see what time. It was a long day. So I was juggling two positions, and yeah, and I didn't even take that big of a position, and because I was already chasing 184, which was basically here, right, and I managed to get some targets in at the end of the day, but I'm still holding that one. So we'll see. We'll see if these things can really get nutty. But I mean, that's a hell of a day that happened. So that was really good. And the other thing that we've been noticing is just the strength in the home builders, right? All this stuff, all this information about interest rates and so forth. How are the home builders doing this? Well, and the home building group. I think what is happening is just the consumer. Obviously, a higher interest rate is a headwind for home builders and for home buying. But right now, the consumer just seems to be stronger than what the move in interest rates is. That's my opinion. But I mean, it's pretty tremendous, right? To see another group breaking out to new highs. And I think the strongest one in here is Lennar, but also DHI. We went over these, I think, in yesterday's video too. Pulte. I mean, look at the participation going on in this group. So I did go long, a little. I feel like I'm a little bit late on some of these things, but XHB, I like the whole group. I like this Fortune Brands as well, which I've been along some calls for a while, but maybe this thing starts to break out of a range. I mean, if that's not a nice setup, I don't know what is. Look at the consolidation going back all the way to September, right, and breaking higher. Now, I had tried this a couple months ago, and I just didn't get the move out of consolidation, but maybe this time it's for real. And really, you're starting to see these breakouts all over the place in certain names. So, I bought a little bit of SE yesterday. Let's see, where did this thing finish for the day? It did okay, up 3%. But again, some of these things, they just look too shaky to me. And until they really get over the 50-day moving average, I will participate to, small to some extent. But really, I think I want to capitalize on the things that are showing the strength, like the semis today, the home builders. The industrial, I don't think the industrials were kind of quiet today, but still up 1.7%. So I know everybody excited to see what the Qs did today, but I have to tell you, I'm more excited about some of this other stuff. Restoration Hardware up 9%. Right? So, I get it. It's very difficult because those trades worked for so long and so well last year. But, I don't give advice in these videos, and nor should I. But I would say you got to open up your eyes and see some of these things, because I think it's pretty darn exciting to see so many of these areas perk up like this, and they've been strong. Some of these areas have been strong for the last couple of weeks. They just have been getting overshadowed because there's so much attention on what Qs and what growth is doing. So a few other areas, that I think were pretty strong too. And by the way, like, you could see me take some trades off too. And because if a trade's not working, right, I know like patience is a big thing, right? And it's important to have patience. But if you're being patient, again, there's a fine line between being patient and being stubborn. And I would just rather be in things that have momentum to them, right? I got into this nuance. And if it's not working, it's not working. And I was looking for this thing to turn the corner and get into value, and it got rejected. So, yeah, it could get back up here, but it just seems like it's underneath the 50-day moving average. It's underneath the bottom of value. So, it's more of a work in progress. Right, and if you have a long time frame, you're going to say buying some of these things on the dip is not, in my opinion, is not the worst thing in the world. But I'm a trader here, and I'm a trader kind of more in the medium short term, more of the medium term, where I want to make sure I'm capitalizing on trends. Right, versus in your IRA, in your 401k plan, your retirement accounts, you could buy the dip in some of these things because you have a different time horizon in those accounts. Another name that's What else? We saw some calls go up in KDP. All right. So again, it's a little bit extended here, but it was able to get that first target in options, which I think is important given this market. BlackRock, this is a name that we talked about a couple days ago, right? Try to break out here. Actually, maybe it was last week. I guess some of these days meshed together, but it had tried to break out a couple days. Well, now you got the breakout, and we did get through. I think it's a good sign. We did get through this VPOC. I took some targets here. So, we want to be able to get above these things, not stall. So we'll see how that shapes up. But for now, what I did is I took a couple targets in at that 1 hour VPOC, right, which was my target as I put the trade on today. And by the way, we put all of our chart setups in here. Every time I enter a trade, right, and of course there's a lot of other setups, right? But every time I get into a trade, we're posting the chart and the setup. All right, so that's that. And again, I decided to get out of WBA. Again, if you're making some changes in your portfolio, if you're taking on some new names, right? Going back to what happened the last couple weeks ago, or the last few weeks, it was a detriment to a lot of people who had too many positions on. So I think one of the main messages too that I wanted to convey in this video before the weekend is, and I talked about this, kind of a continuation from what I talked about yesterday, that hopefully the last couple weeks made you a little bit of a better trader, or is telling you how you need to trade, right? And that's disciplined, right? And that's not putting on too many positions, not being lazy in your monitoring of positions. This happened to me too. I took a hit this month, no doubt about it. And it will make me, and I think I would rather have this happen now in March when there's a lot of the year left, right? We're just about through the first quarter of the year, meaning we still have 3 quarters. If you think about this in terms of a football game, right? The winner doesn't get crowned at the end of the first quarter of the game, right? There's a lot of game to be played left. So for this to happen to some traders, including myself, is a good thing to happen this early in the year. Now you could tighten up your process a little bit. And again, I think last year, while it was great, was a little bit of a detriment to us all because it was a little bit too easy, right? There was a lot of participation in that growth area, and you could relax some of your discipline and still do pretty well, right? The market always recovered. So it's good to have a little bit of this more difficult market that we've had the last couple of weeks to get you back to where you should be in terms of discipline and then tweaking some things. But one of the things that I took away from the last couple of weeks is I had too many positions on, right? And I wasn't doing a good job at monitoring them all. Now again, I'm wearing a lot of different hats. I run a trading room all day long. It would be a little bit different for me. And I'm not making excuses, but it would be a little bit different for me if I was not running a trading room and talking to people and helping them out all day long. I would be a little bit more focused on just my positions. So that's a decision that I've made to run a trading room. And that's nobody's fault but my own. So no excuses. Play like a champion. XLP. We've talked about. Look at the move in XLP this week. Consumer staples. I know they're not exciting and sexy, right? But again, if you cover up the symbol, we noticed this earlier in the week that the consumer staples were starting to look very good. And I took off this. I tried a Verizon trade, and I decided that options weren't the best way to play it. I took this trade off. But I think this Verizon could get to 58. Now, again, it's only $1 move. So there's not that much, unless I'm putting on a gigantic position to get that dollar. I just think there might be a little bit better return other places. But if you look at this group, look at what Coca-Cola did today. Right? If this was a high growth stock, you'd be going crazy. If this was Fubo. Look at Pepsi was another one, up 2%. Now, the other thing too that people don't realize, like, okay, it's Pepsi. I'm not excited about Pepsi. The thing that's nice about this is the options are so much cheaper than a growth stock, right? And that's an advantage, right? People don't talk about that, but the options have this like almost the same implied volatility, maybe even less than the S&P. So if you like trading options and you get a name like Pepsi that moves 2%, that's not really supposed to move 2%. You can make a lot of money in the option space when you have moves that don't usually happen in the consumer staple space. So again, it's versus a growth name it's going to be 3 or 4 times more expensive to trade options in the small cap growth names. All right, so that's again, I covered a lot of my trades because I did a lot of trading today, and I think this gives you an idea of basically some of the ways that I look to trade and to kind of exploit momentum in the market. Let's talk about performance for the week, and we'll kind of end it here. But you could see that the S&P was up 1.7%. The Qs did come back, so they were up almost 1% on the day. IWM was up 2.8%, so was actually the best performing sector. I talked a lot about the diamonds this week too, but they didn't actually perform as well. I think they kind of took the day off today, but they didn't have that big end of the day move. But still, I mean, looks pretty damn strong to me. And when we go over international markets, EEM was down 1.5%. GLD was down. Gold was down just a little bit. Sorry, I don't know why I'm getting distracted on that. For the week, home builders were your best performing sector. Also, those staples that I mentioned, the semis. Just I think the performance today clinched it for them to be in the top 5 best performing sectors. REITs, transport, steel, tech was even up there, up 2.4% for the day. A lot of old tech, by the way, right? Look at this VMware. I don't know if VMware is maybe old tech, but really nice move out of this sideways, price action. We'll see. There's a VPOC up there at 166. You can target. Dell is another one that one of the TTG members brought to my attention. Right, made a nice turn here. Right, this is a name that was in a nice uptrend, sat back. Volume trailed off a little bit on those moves down. Not huge volume today, but a little bit of an uptick. Look at GLW, Corning, up 5% and out to new highs. Unbelievable. Some of these names that are participating that just haven't in a while. So we'll leave it there for the video. Great way, I think, overall to end the week. I think it's a great weekend to, and here's your underperformers, by the way, and here's international performers. Chinese internet's obviously got hit pretty hard this week. But I think a great weekend to, reflect, get some exercise in, and reflect and going forward. I think if you had a rough March, right, it's going to make you stronger going forward, right? If you can get over what happened in March, if you had a rough March, and fine tune what you're doing a little bit, it's going to make you better for the rest of the year. All right. And I would take it away as a positive. I would not dwell on the negatives. I would say, hey, listen, it's a little bit of trading tuition. Doesn't matter what level trader you are, because I've been doing this for a long time and I still make mistakes. Everybody's going to make mistakes. But also importantly, like if you're a newer trader and just trying this out for the last year or two, this is great education for you. You don't learn anything when the market just goes straight up. It's great to make money, but in the end of the day, if you want to be doing this long term, this type of market that we've seen the last couple of weeks is what's going to get you better, in terms of being disciplined, in terms of planning out your trade on the onset of the trade, right? And tweaking your position size as the market changes, right? Realizing that when you're in a more difficult environment, you don't put on bigger positions, you put on smaller positions. To get yourself confidence going and so on and so forth. So a lot more to talk about. I don't want to get the video over 30 minutes, so we'll leave it here. Have a great weekend, everybody. Again, I try to help the whole group, the whole community of Tribeca Trade Group traders, just a phenomenal job today and this week. We're all helping one another. We've got a wonderful community of traders that are pointing out trade setups as well as things to learn from and so on and so forth. So you could click here and you could get involved in being a member of the Tribeca Trade Group. Guys, have a great weekend. See you on Monday.